Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 13th of March, comes to you from London. And what a week it was last week. The collapse of Silicon Valley Bank that really rattled markets on Friday. And interestingly, we've been putting some posts up on LinkedIn, but interesting looking at US banking stocks. You see here the four major US banks, JP Morgan, Bank of America, Citigroup, and Wells Fargo, all indexed to 100. They've been down, we're seeing the Bank of America down, say, 35% since the start of last year. So we have seen quite big falls in banks. But of course, Silicon Valley Bank, a very different breed of bank, we saw that divergence from the other banks in the summer of last year. So really, this trend was very, very much in train. And the core message there is bad news happens in downtrends. So don't be surprised to see these sort of shocks to the downside when we're in a downtrend. And that's really quite insightful. Another thing was last week we did a survey on LinkedIn. How high would US interest rates go? And 51% of respondents said 6% or higher. And I think that's quite insightful. And the market is pricing in at least another 1.25% rise, and many of those respondents were commenting saying much higher than that. So really quite interesting that we're saying 6% is very much a target level based on the consensus in the market. 2,500 people voted, so quite a good sample size, and that's really significant. So we are seeing that there. And if we look at the bond yield inversion, of course, this is another thing that's got the market rattled. It's the highest we've seen since the early 1980s. So 40 years ago, we haven't seen that bond, and that's what's got markets worried is about recession. Really, we're seeing that yield inversion where shorter dated money is actually more expensive than longer dated money. So if you want money for the now, it's going to cost you more than if you want money over a longer term. And that's really what's quite interesting about that yield curve inversion and why the market's worried that that's recessionary. We put another post up today on LinkedIn on the S&P 500 index. Will we make a lower low between 3,500, or will we make a higher high above 4,200? Classic Dow theory question. The votes are coming in, so if you haven't voted already, put your vote in there. It's binary question. It's either we're going lower or we're going higher, and it's quite interesting seeing those results coming in on different groups. We're seeing on most of my followers are bearish, but we're interested to see that on some of the other groups we're seeing contrarian views, and we'll consolidate all those results and post those on my LinkedIn page on Wednesday. So the key thing, of course, is we are very much in a downtrend. This data, actually, the S&P 500 index is coming from Yahoo Finance. Free data coming into your Updata. Of course, you can run multiple data sources into Updata. And we've been bearish on US markets. This is the weekly cloud, the long-term view. We've been bearish on the weekly cloud since the middle of last year. So we had the lower high, lower low, lower high, lower low. It's classic Dow theory action, which suggests probably the lower low scenario, but the reality is we're bearish below the cloud, and we'd need to see a move above this 4,200 level for that trend to change or that view to change. So definitely one to keep an eye on. Quite interesting that we have sort of seen this little trap here where we did actually sort of break the trend there, but we broke higher, but we're falling back. So it's really just a temporary breach, which is why the clouds are great, because they trap more of that behavior, and we need to see a move above 4,200 really to be confident of a move. So looking at the markets, we've got a lot of red on the screen. No surprises there. We had big falls across Europe and Asia after the US falls on Friday. We're seeing the dollar index falling back. Remembering this is my weekly, my daily, and my 60-minute, my long-term, medium-term, and short-term view of the market. So we are seeing the dollar weakening there. So it's quite interesting, and that means that the euro is just regaining some strength. Long term, of course, we found support for the dollar and resistance against the euro. So the long-term picture is still playing out, but we're seeing these shorter-term volatility moves, which is really, really significant. Sterling back above 120 on that weaker dollar, so we are seeing some improvement there. And even Bitcoin, we've seen a lot of volatility in Bitcoin, and there's increasingly fears of contagion. We're seeing banks as a concern, banks holding bonds as liquid assets, and of course, the contagion over crypto is not fully played out. So that's something that is worrying the markets. We did go below 20,000 last week. We've recovered that ground, but a lot of volatility clicking in. And notice this upside target has been negated. That's the really key thing. The upside target, which we've talked about in the past, that's been negated. That's bearish action. So for the moment, Bitcoin is below the cloud on the weekly, looking more and more bearish. The Nasdaq, of course, all eyes there today. We are seeing the market opening a little bit better. Fears of contagion over the Silicon Valley Bank is reduced, but we are still bearish below the cloud there with downside targets. And if we look at the futures, we've got the Nasdaq future actually up 0.5%, but that's not enough to really change the European markets taking this pretty badly. We're down 2% on the FTSE future, we're down 2.7% on the DAX, below the cloud here short term. That's the big fall that we saw there today. That's a really big candle fall because a lot of this playing out post US on Friday. And then if we look at the Hang Seng, we're actually up 2%, but again, that we saw falls in Asia. And it's quite interesting that we're hitting cloud resistance there. The Indian market down 1.5%, so that's really significant. And the Aussie market actually proving a little bit more resilient, down only 0.5%. Of course, interest rate fears in Australia just a little bit lower. We'll look at the energy mix in a minute. We've got gold sitting at $18.91, so now knocking on the door of that $1,900 level, having really tested $1,800 again. We really started to rise there. A little bit of a shortage of targets, but for the moment, gold looking pretty bullish, and silver still not managed to get back above $21, but looking certainly better on that short-term chart. And of course, US 10-year yields falling right the way back. These bond markets creating real issues, not just the yield curve inversion, but also just the number of institutions holding bonds on their balance sheets, and just the volatility is causing real pain there. So quite interesting that we've still got this up target to 5.3, and another big long-term one to nearly 9%. Very hard to believe, but will we go lower, produce new downside targets? There's a lot of uncertainty here between 3.5% and 4% in the in shorter dated bond markets in the US. And if we look at some of the stocks, Apple's still holding well above that 130 level. So Apple very much propping the market up in tech at the moment. But and if we look at some of the other stocks here, we see Tesla falling right the way back. They were above $200, now back into the 170s, really falling away there. Taking a look at the energy mix quickly, we have got a deterioration in Brent. It was looking quite bullish this morning. We had upside targets. We've seen that new price action kicking in. Emissions was just knocking on the door of 100 euros, couldn't quite get there, and we've fallen away again. Keep an eye on those 1 minute targets. Gas prices were down quite significantly this morning, but have recovered. We were neutral. It was just too hard to call with this volatility out to clients. And if we look at German power, we see here that we've had a lot of a big move there in German power as well on the Cal 24, and a lot of volatility just suddenly kicking in, making it much harder to call. Keep an eye on those 1 minute charts. We see how the 149 target was met. We've got a new little target there. Keep an eye on those 1 minute targets on your energy charts. But the really big moves today is going to be watching what happens in the US. Keep an eye on those futures. For the moment, the market is looking flat to a little bit higher, but it all eyes on there. And of course, don't forget to vote on this S&P question. As I said, we had 2,500 votes on the interest rate question last week. Will we go higher or will we go lower? Just submit your view. That's it for today. Until tomorrow, hang in there. Happy charting. Bye for now.